we have two parts of financial statement. We have the statement for profit and loss, other income, and we have the statement of financial position. The statement for profit or loss is talking about the income and the expenses of the business, where we have the trading aspect, the trading part, and we have the profit or loss side with other comprehensive income. For the statement of financial position, we're talking about the account we open for our assets, liabilities, and capital. That's for that. So we continue with statement of profit and loss and other comprehensive income, or statement of profit or loss and other comprehensive income. So what do we get, or what do we achieve with this? We achieve what we call the profit for the year, which is the same as net profit. Are you with me, please? So we achieve profit for the year or net profit as soon as we open our statement of profit or loss account. So what are the items we find in the statement of profit or loss account? We start. Remember, in the trading account, at the end of the trading account, we're going to take away our sales from our cost of sales. Remember that. Sales minus cost of sales gives us the gross profit. So the gross profit will carry to our statement of profit or loss, because the business has to know. The business has to know what its profit for the year is. So the first item in your statement of profit or loss is the gross profit, which is the gross profit from the trading account. Because we said it's an income statement, because we said it is income statement, so whatever we have in terms of income will be added to the gross profit. Whatever the business receives in terms of income will be added to what? The gross profit. This is an account for income and expenditure. Gross profit is the difference between your sales and your cost of sales. The trading account is the account you do your transactions with, where you purchase, where you sell. As soon as that is done, you need to calculate the profit for the year. How are you going to be able to calculate the profit for the year? You need to open a statement for profit or loss account, where you start with the first item, gross profit. Then you add other income to the gross profit. Income like the interest received. Interest you received from maybe your bank. Interest you receive from the bank for saving a certain amount of money there is an interest. So you receive it, it's an income for the business. You add it to the gross profit. Commission received. Maybe you sold some property that you have commission from. So whatever commission you have from other businesses, you add it to your gross profit, because they are still part of your income. So these are what? Income, which will be added to the gross profit. As soon as you've added all your income, you now less it from your expenditures. What are the expenditures? Spendings of the business. What the business has spent on. So part of the items here, we have also carriage outward. Carriage outward. There's a difference between carriage inward and carriage outward. Carriage inward is part of our trading account. That is the amount to spend to ensure that product gets to the premises of the business. For carriage outward is the amount we spend to deliver the products to customers. Do you get the difference here? Carriage inward is the amount spent to ensure that the product is delivered to the premises. That's the cost of transporting the product to the premises of the business. That's carriage inward. But the business might also have to pay to deliver those goods to customers, which is what part of the expenses of the business. It is called carriage outward. Do you understand carriage outward? So all these expenses will be taken away from the gross profit and the income. And that's where we get our net profit. So let me quickly explain each item now. For motor expenses, we're talking about the amount to spend in maintaining your car, your car. We have motor vehicle, right? Motor vehicle is an asset for the business. Motor expenses are the expenditure, spending, maintenance of the motor vehicle that was bought. That is an expenses. Wages and salaries, you have to pay your workers. It's an expenses of the business. Rent and rates, you have to pay rates. It's an expenses for the business. Heat and light, heat or light, you have to pay for those things. They are expenses for the business. Telephone and postages, you have to pay bills. They are expenses for the business. Carriage outward, I just explained carriage outward, which means the cost of transporting the products to deliver to the customers. It's an expenses for the business. Insurance, you have to insure motor vehicle, you have to insure whatever you have to insure. It is an expenses for the business. Interest paid, here, interest received is an income. Please put your mind here. Interest received is an income for the business, which is added to the gross profit. Interest paid on loan is what? An expenses for the business. This is interest on loan. Then we have depreciation of non-current assets. Your assets will wear until we did depreciation before, right? Depreciation is an expenses for the business, yes or no? Because you have to repair your assets because they will wear and tear. So the amount spent on non-current assets is also what? An expenses for the business. Do you remember that? We talked about capital revenue and capital expenditure, revenue expenditure. So depreciation is what? Revenue expenditure, which is what? An expenses. Then we have allowance provision for irrecoverable debts. When we talk about irrecoverable debts, these are the debts that the business would not be able to get back from the debtors. So you have made provision for that in case the debt goes bad. In case what? The debt goes bad. So you have to replace, you have to make provision for that. That's what we call irrecoverable debts. Is it clear? So all these things are expenses that you take away from the gross profit and the income of the business to get your net profit. Net profit or profit for the year. Is it clear?